What up traders, what up investors, Ken here from Dyslexic Investor, and thank you for joining for another fantastic video. We're going to actually be looking at one of the smarter traders on Wallstreetbets posts that I normally see. Of course, you see a lot of on the people on the Wall Street post within not the Wall Street post bets on the sense of Reddit, basically putting out some crazy YOLO plays. This one is on the tippy tier of almost being full-on Wall Street bets kind of style trade, but it was still kind of the overall consensus of the trade was with good intentions, I believe, but it still was really risking a pretty large move within the market. Again, playing Tesla, this individual of Lost and Found WSB is going to give a thumbs up, where to give a little up carrot there. Placing a on Thursday, I was sure that it was going to be wipe out his weekly play. He was actually, we're going to be diving into what he did. He was selling calls and what selling calls means within the options chain. And then on Friday, he pocketed the entire premium with this photo here. So the initial trade here we're going to be looking at, he played about $25-ish thousand. So the overall collateral, you can see that highlighted there. And of course, it was already because Tesla was swinging pretty rapidly throughout this whole week, even though with the overall market was again trending just in that choppy, that overall kangaroo market that we talk about. So what he did was he basically went out and sold the 450, and then bought the 455s. So basically he was creating a spread, a credit spread for those calls. And basically that allowed him to basically wanting towards the end of the week for Tesla to basically to stay, would not reach $450. So that was his initial bet, saying Tesla will not reach 450 this week. And if he does, he gets to collect keep that overall premium. And of course, with his fortune, he was able to collect it back. Basically, that total return of that 7,000 nearly dollars, collecting that full premium, because you can see that those calls that he sold literally went down to 16 cents. So we go back here, those were about $9.30, but of course you have to take the difference out of the two times the amount of contracts that he had, and that's what gives you the amount that he was able to get from the total return of that investment. On top of that here, again, because again, the theta, the time decay, the IV crush that we talk about is what really worked in his favor here. But the thing is, what could have gone wrong is if Tesla would continue to go higher and break above 450, he would have lost his whole $25,000 investment there. So let's go ahead and jump over to the charts and peruse around those guys. So here, looking at the Tesla TSLA chart here, we're seeing again, we're going to look actually at it at a week mode, and basically we're going to do an hourly, we'll do a 15-minute chart here. So we have basically Monday, Tuesday, Wednesday, Thursday, Friday. So this guy was talking about, if you go back to the post, he was worried on Thursday that, again, look, the stock went up to $448. If we didn't get the news and the different various things of President Trump getting the virus, Tesla could have easily carried above 450, in my opinion. Which is, it could have been, but it was basically a no moment, and the bears came in due to the fact of the president getting the virus. And of course, this guy was extremely fortunate in the sense of being able to get those calls really decay in that premium, and that theta really kicked in, of course, the very last day, and he did very well for himself there. But that being said, he placed that bet a little bit too close to, honestly, too close for me, what I would do for comfort. That being said, I would have gone a little bit further out to like 465 at least. But again, I'm using Fibonacci retracements and other technical charts on my end. I don't know what his consensus was on placing that bet at around that level. That being said, so what would have happened if the chart would have continued going higher? Of course, he would have lost all that premium. So we can go ahead and show that example within the Tastyworks client. If you haven't used Tastyworks before, we have an affiliate link down below if you want to check it out. they have certain promotions going. I think it's 100 free shares or 10 contracts, and it definitely could, if you use that link, please use my referral link. I would greatly appreciate that. Let's go ahead and sign in, and I can't type my password. I love my mommy. We'll get this loaded up, and then we're going to show on what could have happened and what could have transpired in the sense of this. So we're going to go look at the old Tesla, pull that sucker up, the table. All right, let's go ahead and flip that over. All right, here's Tastyworks. I love using this for options. It's just so fantastic, and it's a lot of fun. And if you haven't already, please don't forget to like and subscribe, and as well check out the Patreon page if you want to support the channel, and as well as the YouTube membership tab down below. So next week, what's next week? Well, next week is going to come out on the 9th. So those would be options there. So what would someone particularly do on selling those calls or so forth? So looking at those calls and other various factors of that, within Tastyworks, they do a fantastic job on breaking down what the expected move is. So the expected move up here is $31.90 for the week, and IV is very high. Again, IV, the implied volatility is always fairly high within Tesla, because it does move quite a bit. Because again, it moved $33 on Friday. Like, that's pretty insane. Definitely, I think this is going to probably ratchet up a little bit more coming into this week, due to the fact of the stimulus bill and other various factors around President Trump, and of course the overall election. So if you wanted to strictly play the statistical analysis of this, you could sell the 1 deviation, which is this little blue line that comes across. You can also sell the 3 deviation, or second deviation, though, which is right about here. So for example, if I wanted to sell a iron condor, Tastyworks does a fantastic job on doing that. I can go here, hit go, and I would have to move these in and around certain prices. I could play it that 1 deviation here. Let me move this down. Oh, a little further away there. So that. So what would that look like? That would, again, what am I risking? I'm risking $394. Max loss, of course, is that, and max profit is $106. What is the probability of profit? 70%. What's the probability of 50% profit? It's 84%. So I could at least make $55 off of this initially, and I have an 80% probability of profit of that. You can see the theta, that's the time decay, of course. Closer the options are, that theta is going to be kicking in. So if the stock stays within the range of these two, you can see that the potential of playing out of this is we need it to stay in between those two ranges, basically between 455 and all the way up to the 375 on the other range. So that's a little bit, I want to say that's a little bit too risky, because with Tesla, I don't want to sleep at night, so I want to potentially play this a little bit differently. This again is going to be cutting down quite a bit, and you can see that since I'm getting the higher percentage of probability of profit of 96%, I'm only going to be potentially making $24, and that's a lot of risk for a little bit of reward. Of course, with Tesla, anything can happen. But that being said, let's go ahead and do what that individual did, and we can just strictly look at that. So if this individual decided this week again to sell the 450 and buy the he did $5 wide. This is essentially what he would be looking for. He's looking for potentially an 84% of profitability, 81% of potentially getting at least 50%. Since Tastyworks does a fantastic job on highlighting what the potential moves are, you can kind of see that here with that orange line. So we're right out of the expected move for the week there. That doesn't mean it's not gonna break. So just be very mindful of that. That's what the market makers are saying about a $32 move next week. That doesn't mean on a given day. That just means for the whole week. The statistical analysis is saying the bell curve saying $32 move for the week, but you know that those models could go awry. That's only capturing like 68% of the move. If we get a larger deviation move in the overall market, we could see some extreme selling or buying if we get a rip higher. especially with Tesla, this thing could definitely rip in either direction. So you're really kind of playing with a hot fire here. So be very mindful of that. So if this guy wanted to put on this trade again, so he did 100 of these, so we can look at that here. That's around $42,000 this time, for that initial profit of around 7,300 for that move. So just being a little bit insight, giving the understanding of selling calls, selling premium, and how that really works within an active trading account. Again, guys, please don't forget to like and subscribe. I hopefully see you out for the live stream tonight at 9 p.m. EST, Eastern Standard Time. Talking about trading too much, and then I'll hopefully see you out there. And again, please don't forget to like and subscribe. And you guys have a fantastic weekend. I'll catch you guys on the flip side. Peace.